Citizenship is for sale in Portugal.
Tens of thousands of people protested in Portugal in April, furious at the housing crisis.
Each time I wake up, I think, is this the day I leave or stay?
Isto não é uma cidade, é parque de diversões.
Portugal has been in a housing crisis for decades, with soaring rents, stagnant average wages, and a shrinking supply of affordable homes. The locals are getting locked out of their homes, leaving them wondering where to turn.
Portugal being a cheap place to live is a myth.
Like, all my friends are paying $1,200, $1,400, $1,600 for sometimes a one bed.
And with their latest initiative of bringing in digital nomads, things are only getting worse.
But now that a younger, digital-savvy crowd is flocking to its shores, it's putting pressure on the system, especially the housing sector.
This is how Portugal's Nomad Visa is fueling its housing crisis. In the past few years, there has been a surge of digital nomads globally, and many countries are welcoming them. They bring money, skills, and a cosmopolitan vibe to any place they live in. They boost local businesses, fill co-working spaces, and support the country's beautiful and diverse culture. But there's a catch. These nomads come from high-income states like the United States, Canada, and the United Kingdom, and naturally, they aim for countries with a low cost of living. And for a while, this was the case with Portugal.
In 2019, prices seemed very, very reasonable.
Cost of living is still cheaper despite some of the increases in rent.
But as this wave of digital nomads surged, so did the demand for housing. Landlords in Portugal, who were already struggling to keep prices steady, started raising rents to keep up with the demand. Not only that, they would prioritize high-paid nomads over low-paying locals.
They realized that they can rent and sell their houses for much more money to these digital nomads.
Suddenly, those affordable rents start to skyrocket. Apartments that used to go for 800 euros a month were now 1,500 euros or more. The reason why the landlords believed that the digital nomads could keep up with the rent is because the digital nomad visa has a very high income requirement. According to the visa policy, a digital nomad needs to show a monthly income of at least 3,280 euros a month. This is nearly 4 times the Portuguese minimum wage of just 820 euros a month. This excludes many Portuguese workers from being able to afford the same lifestyle as the digital nomads. Not only are they raising the stakes of housing and affordability, they're also disrupting the social harmony with the locals.
Social harmony is something precious. If we lose that, we will also lose part of the investments. So this harmony has a price.
They feel they can raise the rent however much they want, so they're raising it to 1,200.
Technically, the locals wouldn't have to worry too much about the rising house prices, if only their wages matched with the digital nomads. Instead, there have only been stagnant wages and unemployment peaking like never before. In the third quarter of 2024, the unemployed population increased from the previous quarter and from a year earlier. Portugal's unemployment rate for the year 2023 was 6.5%, and the labor underutilization covered 585.4 thousand people, having decreased by 0.3% from the previous quarter and by 7.2% from a year before. It compels us to wonder whether this program was meant to bring in high-paying talent or high-paying tenants.
Não,
sim, porque a maioria dos jovens ganham salário mínimo nacional.
When we examine the root cause of this crisis, we are compelled to believe that it is not a crisis, but an issue that stems deep in Portugal's foundation. In 1999, Portugal adopted the euro as its currency, just like most other European Union member states. And when there's a new currency introduced, it kicks off with low interest rates, making borrowing and lending easy. This led to a boom in the next few years, one which was only creating cracks in the foundation. This boom was fueled by easy credit, which allowed people to spend more on cars, houses, and goods, ultimately leading to a decent growth in GDP, averaging around 1.8% annually. Because of Portugal's privatization, foreign investors were more than intrigued to become a part of this boom. So they invested in real estate and government bonds, which kept the economy growing. But in reality, most of these investments were hot money. This means that the investors were seeking quick returns and were easily spooked by any signs of trouble. Lucky for them, there weren't any. Because Portugal was showing record-rising numbers, it attracted mostly hot money investors. According to the World Bank, the foreign direct investment in Portugal went from $7.3 billion in the year 2000 to over $14 billion in 2006. These investments went directly into three key areas: real estate, privatized companies, and tourism, which grew massively during the years. According to the National Institute of Statistics, the number of foreign tourists went from around 460,000 in 2000 to around 570,000 in 2007, roughly a 24% increase. Similarly, the construction share of GDP peaked at 8.4% in 2002 and remained above 7% in 2007, with over 80,000 new dwellings per year in the mid-2000s. All these numbers sound great till you realize that all this is from foreign investment. And if you've watched our previous videos on the channel, you'd know that excessive foreign investments lead to over-reliance, making the country vulnerable to global tremors. One of such global tremors was the 2007 to 2008 financial crisis. Basically, during the years 1999 to 2007, American investors had been taking loan after loan, flipping properties in Portugal like pancakes and profiting from the sale every single time. But suddenly, the prices would stop rising. As American investors defaulted on their loan payments, the credit market froze, and the economies that were in on this deal took a huge hit. According to Eurostat, Portugal's GDP, which had been growing steadily, contracted by 2.9% in 2008 and a whopping 7.9% in 2009. And when an economy's GDP contracts for 3 consecutive years, we label it as a recession. And because of the lack of inflow in tourism and construction, unemployment, which had been below 5%, shot up to 10.7% in 2010. Portugal has struggled with a housing crisis ever since the financial downturn, even after years of recovery and growth. This is because the government's efforts to boost the economy ended up making the housing problem worse. By 2011, it was clear that Portugal couldn't handle the situation on its own, so the European Union and the International Monetary Fund authorized a €78 billion bailout package for Portugal, but it came with some intense austerity. This meant deep cuts to public spending, higher taxes, and painful reforms, and at the same time, unemployment and homelessness continued to rise.
Behind every box is a family in need, a family of 6, another family of 6 here. The oldest person to receive help from this charity is 89, the youngest just 17 months old.
Meanwhile, the country tried to restore its foreign direct investment to pre-crisis levels by introducing a new visa program that essentially put its citizenship up for sale.
Citizenship is for sale in Portugal. It's giving away residency to anyone who stumps up €500,000 to buy property there.
In October 2012, Portugal introduced a residency by investment program aimed at attracting foreign capital. This initiative allows non-European Union citizens to obtain residency permits by making eligible investments, such as capital transfers, starting businesses, or contributing to Portuguese cultural and scientific research. Between its launch and September 2023, 2,718 primary applicants were granted the Portugal Golden Visa, contributing a remarkable total of €7.3 billion in investment to the country. After releasing the Golden Visa, the government realized that, given their tropical climate, rich culture, and beautiful sights, they should double down on tourism and become a pensioner's paradise.
French citizen Christine Paris has decided to move to Portugal. Seduced by an income tax exemption, the country is now offering foreign pensioners.
This program allows pensioners to move to Portugal and enjoy their pensions tax-free for up to 10 years. These schemes have also helped Portugal find buyers for vacant homes left over from the financial crisis. In 2014, Portugal successfully exited the bailout program following positive GDP growth, though unemployment remained high. While this marked a step toward recovery, further growth required higher wages and significantly lower unemployment, which depended on attracting business investment. However, the government chose to focus on revitalizing tourism instead.
Colourful houses, fabulous light, charm is the most popular postcard this summer. Lisbon now has more than 15,000 tourist properties.
From 2015 to 2019, GDP growth picked up due to the tourism boom. At the same time, Portugal's exports steadily grew, but were still insignificant, considering how the country has been in a trade deficit for years. This was due to their reliance on foreign goods and services, just like their reliance on foreign investments. But so far, Portugal's economy was recovering, slowly but surely. Tourism was picking up again, and things were looking a bit brighter. Of course, they were relying more on tourism money than domestic money. But this was an unlearned mistake of Portugal's government, the kind of mistake that would come back and bite them in 2020. In March 2020, the whole world was plagued by COVID-19, leading to businesses shutting down, lockdowns across the world, and flight cancellations. So for a country whose economy heavily relied on tourism, they were about to nosedive into a massive loss. Tourist arrivals plummeted by a staggering 72% in 2020 compared to 2019, and with the hotels, restaurants, and businesses deserted, tourism's contribution to GDP fell insanely low. Portugal's GDP shrank by 8.3% in 2020, the worst contraction since 1936. While it rebounded somewhat in 2021 and 2022, the impact was undeniable. And the housing market? It only got worse. Housing prices rose from 6% in 2020 to 11.2% in 2021 and 13.5% in 2022. In October 2024, apartment prices rose by 12.9% and house prices increased by 9.8%. With a foreigner-driven country like Portugal, the local skilled workers saw limited opportunities and a bleak future, compelling them to leave Portugal in droves for better prospects abroad. According to the country's official emigration observatory, 850,000 Portuguese people aged 15 to 39 have at some point left the country to work abroad. Many Portuguese families suffered deeply during the crisis through no fault of their own because the government consistently prioritized foreign investments over domestic growth.
We have now the biggest investment on housing, on public housing, and try to get solutions for the young people. It's an enormous question mark that we have in the future and we have to deal with.
But for now, Portugal is at a crossroads. It needs to find a way to balance economic growth with the needs of its citizens. If it fails, the dream of a Portuguese paradise could slip away for good.
What I fear now is that my next home will likely be the cemetery.
Talvez